So thanks, Prince. Thanks for this opportunity. And, it's always great to share knowledge because that is how, we have also progressed, and let's keep the wheel going on. So regarding today's topic, multidisciplinary investing, and why this is exciting because uh, what I have seen, and, I have been in market for last almost 14, 15 years, actively or passively. And the way I have seen markets emerging, especially in India, somebody who is a fundamental investor, he used to be a fundamental investor. Somebody who is a chartist or technical guy, he used to be a technical guy. Even till 5, 6 years back, it was kind of, not so popular to, adapt to both the skills. But recently in last 1, 2 years, I can see there is a lot of emphasis, and there is a lot of openness to adapt to whatever it takes, whether it is fundamental, technical, which is good because every skills bring something to the table, and that is where I thought why not to discuss on this topic. So feel free to ask anything regarding this kind of multidisciplinary investing rather than bucketing in one style, because this is where the world is going and this is where investing is going. And whether we talk of auto or we talk of any sector, hybrid is the future, and I feel even in investing or trading, hybrid is the future. So that is where all this multidisciplinary investing comes in. Now, my definition of multidisciplinary investing is not only restricted to fundamental or technical, but also multiple styles. So it is always like, okay, are you a value investor? Are you a growth investor? Are you a trader? Are you an investor? These kind of questions. So when we say multidiscipline, it means we are being open to learn everything which can add value, and then see experiment where we are more aligned, which is more suited to us in terms of our behavior, in terms of our learning ability, in terms of our investing style, in terms of our psyche. And then once we know what is our strength and weakness, then choose that path. So that is how I would define multidisciplinary investing, which will include the process, which will include different types of decision making system, which will include different types of timeline expectation in terms of the whole investing or trading process, and a combination of all of that is multidisciplinary investing as per me. So let us keep all the discussion going, keeping this topic, Prince. So let me explain. Yeah, so I'll tell you. So see, the first thing is we always think like fundamental का मतलब है कि P&L balance sheet देखना, और technical का मतलब है chart देखना. But the question is why they are significant and what is their importance. And many times I get this question कि fundamental सीख लिया तो technical सीख. I hope we can do English, right? So see, the fundamental, it brings different kind of data to the table. Technical, it brings different kind of data to the table. So as an investor or as a trader, the goal is common. Everybody wants to make money, and that is where all these styles they sink in. So everybody, I am talking only about the long market. So everybody wants to buy at a lower price and sell at a higher price. That is how we make money. Where the difference comes out of multiple things. The difference comes whether we want to make money in 2 days or 2 months or 2 years or 2 decades. That is the first. The second difference comes, how do we want to make money? What is our process? So do we want to make money by understanding the quality of the company, or do we want to make money by understanding the buyer and seller and the demand supply equation? The third thing is, when we want to make money, are we trying to make money by simply being observant of the demand supply equation, or are we trying to make money by betting on the jockey, which could be a management? So there are multiple things, and first one needs to decide where he is aligning. So first we need to understand ourselves. Are we interested in making money in 2 days, or are we interested in making money over 2 years? And that itself will differentiate first level where we want to go. The second is, are we interested in making money by understanding the company fundamental, management fundamental, or are we interested in making money by understanding, is the share in oversupply or undersupply and all of that, because that is the crux of data. A fundamental data will tell you about the quality of the company, the quality of the management. A technical data will tell you today whether the buyer is overpowering or the seller is overpowering. So these are two different things and they have their own importance. And as I said, the goal is common. The goal is to buy at a certain price and sell at a higher price. That is how everybody makes profit. But in order to do that, the question is what drives the prices? Now, what drives the prices? That is where all these factors come. So, company's fundamental, its balance sheet, its cash flows, it has one role to play. The valuation has one role to play. The quality of management has one role to play. The execution has one role to play. The news has one role to play. The overall market sentiment has one role to play. How many buyers and sellers are there in the market buying and selling that share? That has importance. So there are so many factors which impact the price, but which factor impacts in which time horizon, that is where all the difference comes. And whenever we look at the trade data, which is your daily buy sell price data, that is what impacts the price in the shorter term. But when I say shorter term, it could be 10 minutes, but it could be even 6 months to 1 year, which people think that 1 year is not a short term, but even the buyer and seller behavior can impact prices for 6 months to 1 year. In fact, the whole 2018-19, when small caps index went out of favor because there was no money interested. So we need to evaluate that what are the factors which are driving. And when you evaluate these factors, then you see that there are certain factors which are driven by fundamental and there are certain factors which are driven by what we call technical or demand supply or trade data and all the things. So then we need to decide that what is our time horizon, what is our expectation, and which are the factors which are driving. And then we need to take a call whether we are interested in ultra short term factors or short term factors or mid term factors or long term factors or a combination of all of these. And that is how we take our call. So first thing is you should know that what is your strength. Your strength is more around understanding financials, understanding management, understanding businesses, or your strength is more around analyzing mathematical data. Like what you see head and shoulder and all, that is just an outcome. You have to understand the mathematics and the numbers behind it. What is the moving average? What is the RSI? What is the demand supply? What is price? So if that is your area of interest, then you should focus on trading. Also, you need to take care of what is your time horizon expectation, and then you should decide. But you can start with one and start learning other also if it excites, and over a period of time you can try to blend both of them.
Have Saurabh like started from one side of being technical or fundamental, and what time he felt that combining both, what made him believe that combining both will give him a better output? Anything of that sort of his insight he can share, that would be great.
Sure, Ravi. So, see, the first thing is everybody has to start somewhere, and until we don't start, we don't know what we like. So, until somebody will do fundamental or technical, he will not know what he likes and what he doesn't like. And same happened with me. I started with one, and then over time, I learned the other one and learning parallelly. Now, what happens is, as I said, different kinds of data bring different value to the table. So let us say I did a fundamental investing first, and let us say the stock is not going anywhere. Now, why the stock doesn't go anywhere? A very simple reason is because maybe those who can move the prices, they don't believe in my theory. Maybe they are not believing in my theory today, which I am seeing. A simple reason why prices move is you have more buyers than seller. And sometimes it can happen for one day, the price will go 5% up. Next day, you have more sellers than buyer, it will go down. So for the price to consistently move, it always needs buyers overpowering sellers. And that is why prices can keep going up, 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 or down, down, down. So only knowing fundamental is good if you have your conviction. But let us say you have your conviction, we are waiting for 2 years and the stock price is not moving. Now what happens, and this is my understanding, these are my mistakes, that sometimes I did bet on the right set of company, but I kept waiting and it didn't move, and when I left it started moving, and that left me perplexed that why did it move after I left and why it didn't move for 2 years. And the answer lies in demand supply, The big buyers came only when I left the company. I will give you one example, and again, it's my personal view. People can agree or disagree. If we look at ITC, like 2016 to 20, ITC was butt of all jokes, and my tweets are there from last 2 years. If you look ITC, the whole price fall which happened because of the ESG wave, where some 165 plus mutual funds they signed on the ESG compliance, and the FIA started selling ITC, and ITC is like a 2 lakh 3 lakh market cap company. Not everybody can absorb ITC like a small cap stock. And the FII holding in ITC between 2017 to 21 fell from 22% to 8.75%. And this whole fall was nibbled by the DIIs, which are mutual funds. But when you have such a big seller who is selling for whatever reason, keeping fundamental, technical, ESG, whatever. But the problem is you have a seller who is selling from 2 years, 3 years, and then there is not enough people to nibble. Then what will happen to the price? It's not like people didn't know in 2016 that hotel is a shitty business or whatever you call. Right now, hotel is also a rosy business. But people knew everything. Nothing ITC has done anything new in last 3-4 years. Everything was known, and still at one time it got a 45p, and at another time it got a 15p. And the whole reversal of the ITC price has happened only when again FIA has started buying back. So now you had FIA also buying, and DIA also buying, and retail was also buying. So this is what it took for ITC to reverse, and of course then the sentiments and the results and all of that comes into play. But many times even in trading you will see the results are very good, but the price is not rising, the price is falling. So what they say, all the good news is already factored because the buyers they already knew when they purchased. So these are the things which made me think that okay, even if I have conviction, I am losing patience when things are not moving for 2 years. So how should I know that sometimes more patience is required? So these are the places where I realize technical has importance. The second is asset allocation, and how do you increase your positions. And again, there are certain psychological levels we call, like everybody talks about this support and resistance. Basically these are levels you have big change of hands happening, and big guys, they move the price. If I buy some 2 lakh rupee share, it is not going to move, but somebody who can buy 200 crores of share, he's going to move the prices. So the idea is to get benefited from them and leverage the fundamental skill, and increase the overall conviction in terms of buying, increase the timing, because if you are making money over a period after 2 years of wait, if that wait can be reduced to 1 year by studying additional data point which is bringing a different kind of value, why not to do it? So these were the reasons, and there have been stocks like I will tell you, Ambika Cotton was one stock I identified when it was at 1,000 rupees. It came down to 500 rupee, and then again it went to 2,700 rupee. So why, despite of good fundamental, the stock was falling? I mean, so this is where the buyer and seller equation, all of that comes. And if we understand how it is happening, and if we can crack that, then it helps to leverage the whole fundamental skill in a different level, and it helps us to increase the CAGR, increase the better entry. The other reason why technical, I will tell you the third reason. I've been good in buying and identifying good companies, but timing, as I said, that was one issue. The other issue was selling. And being a retail investor, we don't have that kind of information advantage. So many times we are the last leg of information flow, and by the time the news comes in the public, everything is done in terms of price. So how do you avoid a bad news where the damage is already done? And again, the answer is by following those who are the first leg of information flow. And those who are the first leg of information flow, they will be the first one to take that action. And this whole trade data captures all those actions, and what you see in a technical analysis is a way to understand what those big guys are doing. So even in selling decision improvements, the technical analysis comes to help because of simple reason, information asymmetry, which happens in fundamental. Unless you are that kind of fundamental investor who is totally connected to the ground, you are talking to the supplier, you are talking to the vendor, you have understanding of on the ground level what is happening in the business, which many of us may not have. So where technical analysis comes as a alternative skill to do the same. So these were some of the reasons why I try to leverage technical apart from fundamental, and I realized there is a potential, there is a value, and then by blending both of them, I could identify that there is an incremental value in terms of buying, in terms of timing, in terms of allocation, in terms of selling. depends. Like if I talk about myself, I have fundamental scanners like everybody has on screener. And even in fundamental, I have different styles of investing scanner. I have something for value, I have something for momentum, I have something for capex, or I have scanners where I just look at the what is the market cap and what is the total asset value. And many times I have found companies where the liquidated value, the net asset value is almost closer to the market. Or if you add the work in progress and capex, which is not contributing, sometimes 90% of the market cap or enterprise value. So that is one level of filter. Now if you want to blend technical, you have to ask what kind of technical you are playing. So sometimes, if I can take off one recent example where I was talking about Wabha Global. If people remember, I was questioning the valuation and all of that. Now you cannot have Wabha Global coming in a momentum indicator. So you should have, and I believe there is a lot of, the way technical analysis hype is, everybody thinks technical analysis is only about momentum investing. But technical analysis is just a price, volume, buyer, supplier, demand, supply equation. You can apply it in a momentum, you can apply at 52-week high, you can apply it 52-week low. So same way, you need different kinds of technical indicators which can say out of 4,000 stocks, which stocks are in high momentum, but out of 4,000 stocks, which are the stocks which are not at all in momentum, but there is something interesting happening. So if you would have studied some of the basics of technical analysis, they call it 4-stage analysis: stage 1, stage 2, stage 3, stage 4. So basically you have to be in stage 1 or stage 2, and the big money is made in stage 2, but the big investors, they come somewhere in stage 1, which is when the accumulation goes on. So do you have scanners which can help you to identify whether a stock is in stage 1 or stage 2 or 3 or 4? So on one side you have fundamental scanner, so maybe a value investing fundamental scanner where the stock is very attractive, but nobody is looking because there is too much of pessimism. So that is what the fundamental scanner is telling. But your technical scanner is telling the stock has come in the stage 1, where maybe the big guys have started accumulating and the price is not moving because they can't accumulate in one go. And especially in India, in small cap, mid cap, 5 crore का buy करो आप, 20% का upper circuit लग जाता है. तो these guys, they have to buy slowly. They have to give the 6-month time to accumulate the total quantity they want to accumulate, by frustrating those people who are holding and selling in frustration. So you have to marry the right fundamental scanner with right technical scanner. So for me, it is not about this or that, or I will start from this side or I will start from that side. For me, it is about, think about from an investing and trading perspective, which of these scanners are marrying to which scanner. So maybe my stage 1 scanner is marrying to a value investing, whereas my stage 2 scanner is marrying to a momentum, growth investing kind of thing, where the earnings are there and the buyers have entered and the whole supply has been sucked and the stock is moving. So think from those angles, try to build scanners from both sides and try to marry it. Try to find the logic why these two scanners should talk to each other. So I will tell you, Wabha Global came in one of the fundamental scanner and it came in one of the technical scanner, where I look for these kind of pessimism. And again, if I go back to that shareholding data, you will see that the promoters were accumulating. But I know it's a stage 1. Stage 1 can go for even 6 months or it can go for even 2 years. And if you read fundamentally, you will know that the stock is having headwinds for 2 years. So even if I am buying, I am knowing that this stock may not do anything for next 1 or 2 years. So that is where even being prepared, and how are your expectations being set. And do you want to just play a small game of that short term or downtrend में या consolidation में भी जो 20% वाला move आता रहता है, do you want to play that? So that is how you should look at all these scanners. And then of course everything comes with experience, and that is how I am also learning. So the more experience you get, the more you look at your scanners for 1 year, 2 year, 3 year blend, the more insights you get that this is how you blend it. So my suggestion would be, first identify what kind of investor you are, what kind of time frame you have. Accordingly build your scanners, and then try to look from both sides and see which of the ideas are matching. Why a company coming in this scanner fundamentally technical is moving in this way, why it didn't move, and keep refining it, and that is how it works.
Right, Saurabh. So one question is on upward averaging. So he's asking like how you go about if you identify a stock and if you find value from fundamental or technical side, say. So how do you go about accumulating or upward averaging? What is your and what should be the ideal way to go about it?
Okay,
Or
so there are
if
two.
I may add in this, what should be the initial allocation percentage when you identify any new stock?
Okay, okay. So see, first, at least for me, there are no hard and fast rules as such. Like, let's say if there is a stock where I have very, see, there could be sector which I have studied from last 10 years and I might have seen two, three cycles and I have a much deeper understanding in terms of understanding the sector, in terms of looking at the cycle. And there are sectors or companies which could be very new. So all this allocation depends on a lot of things. What is the comfort level of the sector, understanding of the business, and then comes key where I am participating, where I am entering. So I try to avoid that stage, you know the stage 3, which is typically where the stock tops out, because that is the worst place to enter. The worst of wealth destruction happens by entering at the top, like what has happened in lots and lots of stocks, like your your HLE glass quota. If you talk of 7,500, lot of diagnostic companies, I don't know how many years it will take to get back to those prices. So first, how to avoid that? So stage 3, then this whole downward trend, when on every 10% fall, because price गिर गया 20%, बहुत लोगों को हम लोगों को लगता है कि stock attractive हो गया है, but still it is not attractive. So the second is, am I able to avoid there? Now what happens with me is, I am not a typical momentum investor who gets in, when the full momentum is on, because I still have that fundamental side. I like to read companies. I like to build conviction. I like to be prepared. And then as my conviction grows, I increase my position in parts. But I have certain timelines that, okay, 6 to 12 months, I'll keep buying. Like if I take example of Aegis in December, January, there was no momentum and the stock was around 220 to 180. And that is where I started studying. So if you see in last 6 months, from no momentum, slowly the momentum has come in the stock. So my first objective is I should never ever buy at the top stage 3, and I should be able to avoid buying at stage 4, which is still the downtrend. I am somebody who likes to enter in the mid of that accumulation band, which may last from 6 months to 1.5 years. But I am not perfect, so I do mistakes. So maybe I might buy in the last leg of downfall, and let's say I might buy, like, I don't know camps if we have created a bottom at 2000, I don't know. But I have a valuation range that, okay, I will buy between 20. Fundamentally, it looks to me 2200 to 1600 could be a decent buy range, and I will accumulate. So I'll divide my money into 3 4 parts, that okay, if इस level पे इतना लगाऊंगा, इस level पे इतना लगाऊंगा. Then I look technically whether it has finished its stage 4 or it is in stage 1. And many times we don't get, because in hindsight charts look easy, but when the charts are being formed, that is the most difficult part to interpret it. So still I don't know if we have seen the worst in camps, or maybe we will see one more round where we will get it down from 2000 to 1800. But the idea is to avoid, वो पहला तो अगर avoid कर लिया ना, तो पैसा अच्छा बन जाता है. Then comes, how do you allocate it and where you increase it? So again, depending on my conviction, if this is a business which I understand it well, if this is a sector I understand well, if I see some immediate tailwinds, I can rightly put a 3 4% kind of position. But if I'm not sure, like if you take a Wabho Global kind of stock where I see there could be potential headwinds for 2 years, maybe I will start with a 1% kind of position, and then over a period of 1 year I will slowly build that position. Because you would have seen market में 4 साल का return 4 महीने में आता है, and you should, the key is you have to know that you have to be prepared for 2 years of pain. So setting expectation is very very important. So depending on how fast or how slow tailwinds will be, what is my expectation? Is it to make money in 1 year or to make money in 3 year? What the charts are telling? Is it still not sure about whether we have finished the downtrend, or we are in the accumulation phase, or the momentum phase has started? Taking all of this into consideration, I try to buy. But I am not somebody who will buy everything in one go. I like to divide into parts and buy. So अब स्टेज 1 में आप कब कब बाई करते हो? So if you see typically stage 1, the stock will move in a range. First it will stop falling, जो bottom बन गया वो बन गया, वो जब जब वहां पे आता है, that big buyer will come and buy. So once you see a stock showing one or two signs, you'll see, like if I can remember 2 years back, that is what happened in Greenply. Greenply made a bottom around 70-80 rupees, and then you saw 2-3 times, the same price gave support. If I talk of Laurus Labs going 3 years back, you will see the same price range, good 20% band. The stock was there for 6-7 months. So one is you try to buy in the lower range whenever it comes by dividing money into 2-3 parts, and then 6 months, 1 year, you build your position decently, and then if your fundamental conviction story plays out, then you go and you make money, when the momentum comes. But if you are somebody who is just playing momentum, then of course you will never enter till it is below certain moving average, which we call golden crossover and all. So then of course you are entering there. But then if you have to add your positions, then you have to add your position because you are a trader. So you have to add your positions where your risk reward is most favorable. So when I talk of fundamental, I said my valuation band is 1600 to 2200. So I'm looking for a margin of safety कि ठीक है 1900 पे तो पैसा नहीं डूबेगा. Now if I am entering as a pure trader, in momentum, as a momentum trader, my objective is risk reward. So there are certain specific price band, and again depending on the time horizon, like if you are playing on a 2 year kind of horizon, you better look at weekly charts. I try to accumulate stocks around 13 week to 20 week whenever it touches, because most of the times, until unless the stock is in super uptrend, like if you have a stock like Rajratan, you will see it didn't even break 20-day moving average for a long time. But if your stock is in normal kind of trend, you will see the stock will get a support around 13 week to 20 week moving average, maybe 2 times, 3 times in a year, and that is where I would like to buy, because वहां पे मेरा स्टॉप लॉस रहता है, एंड देन द स्टॉप लॉस एज अ ट्रेडर इज 3-4% का गिरा तो फिर आई विल एग्जिट. So depending on all of these, your style, your investment style, where you are buying, what is your thesis, what is your time period, are you a techno funda guy, are you a pure trader, are you doing value buying at the bottom, are you doing momentum buying, accordingly you need to take a call कि कहाँ पे इस तरीके से accumulate करना है. But these are the two ways I do. As I said, सबसे पहले तो स्टेज 1 में आप नीचे नीचे लो जब सपोर्ट बनता है, और अगर आप मोमेंटम खेल रहे हो तो अगर सुपर मोमेंटम स्टॉक है, then you look for, usually I go lot by moving averages because that is where my experience has been. So 13 week to 20 week is the kind of place where I like to accumulate while buying things.
Right, Saurabh. So Vijay, you can unmute and ask your question.
Yes. Good evening, everyone. Good evening, Prince sir, Vajpayee ji, Saurabh ji. So my question is, well, it's not on any stocks or any view regarding markets, but it's regarding valuations. Well, if you remember, जब कोविड क्रैश हुआ था तब भी निफ्टी का पीई 2021 था, एंड नाउ इट्स आल्सो 2021 जो भी है. और इन दैट टाइम आवर ईपीएस अर्निंग पर शेयर वाज अराउंड 420 430 440 समथिंग, और अब अर्निंग पर शेयर डबल है, और तब निफ्टी था 12,000. मतलब अगर वो कैलकुलेशन लगाएं तो अब तो निफ्टी को 25,000 होना चाहिए था या 24,000 होना चाहिए था whatsoever. So and if you still tracking it, I guess we are the most expensive market in the world, the most expensive right now, and our earnings are significantly cut for FY23 and FY24 significantly. And do you think we are due for a reality check as well as far as this valuations are concerned, market valuations are concerned?
Yeah, so it's a combination of everything, and ultimately, in long run, it is all about valuation. In short run, the liquidity, the sentiment, and all comes. So when you look at the 10-year, 15-year of data, the overall CAGR of any index and the EPS performance of that index, both of them, maybe by 2-3% they will mismatch, but mostly they will match. And there is a beautiful book by late Parag Parikh sir, where he did a lot of this analysis right from 1990s to 2013-14, till he was there, and you will see, and even if you extend that analysis, you will see the problem comes is we look at these numbers as sacrosanct, and we just take a number, we don't try to put the effort. Now the problem with COVID is an outlier event, and a lot of businesses 1 quarter 2 quarter they didn't perform, there was no business. I mean, it's not like those businesses would have died, it's just that no dhanda happened for 3 months 6 months. So there was lot of data treatment, outlier reduction, normalization which needed to happen. And actually in September and December I made 2 videos on is Nifty PA really 41, because that time I remember The Nifty P, if you see the NSE site, that was 41. And when you would have done a lot of that analysis, you would have realized that it was not actually 41, but it was much lesser. That is one. Second, this whole Abhi NSE is also taking consolidated, but that time NSE used to take standalone versus consolidated. The third thing is, there were a lot of commodity companies which are making losses. There are a lot of PSU banks which are making losses. Now, when you look at Nifty and you look at these 4 5 companies, the contribution of losses might be it was subsiding, profit by a great extent. The fourth point is the corporate profit margins. If you look at those times in 2019 and all, we were at one of the lowest corporate profit margin. When we peaked in 2007, the corporate profit margin was almost around 7%, and we have come down to almost 2.5%. So the reversion to mean. So P is just a metric which is getting driven by so many factors, the market cap and the EPS. So I believe lot of data treatment is required to, normalize, especially in an event like COVID, when, 2 quarters you don't have any business happening and all of that. There is a lot of data normalization required. So maybe if you watch that video, you'll get a sense that what all activities were done to, as per me, to say, I feel what is the right P. And then of course the growth came, the EPS growth came because of whatever reasons, because your IT was performing, because your costs went down, because nobody was traveling, your SGA cost got saved, which is again not a sustainable situation, because those margins have to go down, and that is why the IT companies stopped up. So a lot of these things needs to be factored. Right now, if you look at the Nifty P, I think it was when we were at 15,500, 16,000 levels. We touched somewhere around, I think
18,
20, if I
19.
am not wrong. Yeah,
18,
18,
19.
19. Now the question is, where is the future direction? Now there are two things. We need to break what is in this whole, and many times I feel we should better take a index which is more like, we have to first normalize the index. So on one side, there are debates that, you have very good commodity profit which will not repeat. But the other side of debate is you have banks who have not performed for 4 years. So there is equal debate on the both sides. The way I look at it is, and again I tweeted some time back, we have to look at portfolios or indexes in terms of domestic versus export, because there could be pain in US, in Europe, and globally, but the domestic economy so far it has been doing well. So now we need to see how much of Nifty portfolio is exposed to that, and in that maybe there could be businesses which could still do well despite of global slowdown. Like recession came in 2008, but if you look at IT growth rate, I don't think IT growth rate suffered in 2008, because maybe it was a necessity, or maybe to save costs, giving business to outsourcing nation, that is the only possibility. I don't know, but it didn't suffer. Or a pharma, which is already pharma exports in US anyway, they're commoditized. So if people need medicine, but maybe chemical businesses, or maybe businesses where people are willing to cancel their purchase, that could get impacted. So I believe that is how we have to look at Nifty, and rather than looking at Nifty, I am more comfortable buying companies which have lesser exposure to exports and more domestic consumption, rather than plainly looking at Nifty. But even if we look at Nifty, of course, we are not in the most attractive zone, because this 20% move has come very fast. I don't take any kind of future estimates, because we never know. Yaar. We say that we will do well. Abhi everybody is telling, and in 2008 also we heard similar stories that we are globally decoupled. But when some global phenomenon happens, nobody knows. So rather
Well,
than
well, in
predicting whether it will
2008,
go,
we fell more than US.
yeah, exactly.
What
So I'll
decouple hua
not get
tha
into
starting mein?
prediction. Yeah, the best way we can save ourselves is having a better margin of safety. So the best is, whenever the margin of safety reduces, go more in cash, and whenever the margin of safety increases, invest more. That is how we will see. But I don't think we are anywhere in any kind of bubble zone. Maybe a 10-15% correction, we again come back to the same 18, 19, 20 band. Because if we look in last 12 months, the EPS has grown. It has grown decent. Future, let's see how it happens. And again, market will be the biggest indicator. Price is the biggest indicator, and again, that is why I believe in the power of all this technical analysis, rather than me trying to predict that next quarter or next year how much EPS Nifty can do.
But you may choose not to answer this question. But right now, do you
Saurabh,
think we are
if you
overvalued, or like you may choose not to answer because it's your business. Now, what do
Saurabh,
you think
if
about the
allow, I can
valuation?
take few of the points which Vijay asked.
Yes, yes, please,
Hello,
sir. Please, sir.
विजय
Yeah,
यार
yeah, sure.
Question.
Go ahead. Go
एक
ahead. Go ahead. Go
विजय
ahead.
विजय एक चीज है. What happened is last year ना निफ्टी computation of EPS has changed somewhere in May June. ठीक है, उससे पहले हम लोग निफ्टी में ना जो EPS कैलकुलेट करते थे that was on stand alone. From somewhere around May June 2021 we have moved to consolidated EPS. There would be an article on money control. If you search you will find that article somewhere around mid of last year.
There were lot of outlier things in Nifty, and that is why I would say you go and watch that YouTube video. I have gone through each and step by step process of how we arrive from 41 to right PE. Of course, that's a 1 year old video, but that will cover all these factors, including the standalone, consolidated, and all.
Actually, we are discussing here for investment point of view and not discussing on Nifty valuation. So
Please,
I
sir,
think
continue, please. Please.
our
So thank you for your question,
conversation should be
Vijay.
on the same direction. Right?
So Vajpayee ji, any question on technical side? You closely track technical. So any question from Saurabh?
अब जैसे सौरभ जी अभी आपने ग्रीन प्लाई का आपने मेंशन किया, तो इसके संबंध में आप बताएंगे कि क्या ये एक्यूमुलेशन फेज इसका चल रहा है या डिस्ट्रीब्यूशन चल रहा है, क्योंकि ये पिछले एक साल से लगभग इसी रेट के दायरे में 170 220 के बीच में चल रहा है और रिजल्ट कंपेरेटिवली कुछ ना कुछ इसके इम्प्रूव ही हुए हैं. तो इसके डाटा को देखते हुए आप इसको कैसे एनालाइज कर रहे हैं?
Which company you were talking about?
ग्रीन प्लाई अभी आपने मेंशन किया था बीच में.
Green line. Okay, okay. Frankly, see, the way I work is, and I will tell you, किसी के लिए भी 3-4 हजार कंपनीज क्लोजली ट्रैक कर पाना बहुत मुश्किल है. द वे आई वर्क इज, जो कंपनीज मेरे स्कैनर में आती हैं वहां से मेरा काम शुरू होता है. तो एक तो ग्रीन प्लाई मेरे स्कैनर में कभी आया नहीं है, बट आई वॉज इन्वेस्टेड इन दिस कंपनी, सो कभी कभी मैं फंडामेंटली देखता रहता हूँ. माई सेंस इज इट वॉज अ प्लाईवुड, इट इज अ प्लाईवुड कंपनी, बट आई थिंक उनका कुछ एक्सपेंशन आ रहा है जो आई थिंक वो भी एमडीएफ में कर रहे हैं. एंड आई डोंट नो इफ देर आर एनी काइंड ऑफ, बिकॉज ग्रीन प्लाई और ग्रीन पैनल का डीमर्जर हुआ था. I don't know if there is some kind of agreement that 1 year they can't do this and that, but some expansion is coming. Charts I have not looked in detail because the charts need to come in my scanner. So you don't go and look for charts. The chart should come in your scanner and then you see. So it will be difficult for me to say, but I believe few things have changed in Greenply when I was invested in 80. So one, आपको थोड़ी family history देखनी पड़ेगी. वो मैं बहुत ज्यादा नहीं बोलना चाहता, but they got a new CEO. Why they got a new CEO despite of Sun being there? And if you read the last year annual report, there was a focus on we are going to reduce costs, we are going to become more efficient, and all of that. And to a certain extent, they have done, and all that happened, and that is why this whole price moved from 80 to whatever 230, 240, and then it has come down, and it's staying there. मेरे को चार्ट पे ज्यादा नहीं आइडिया है बिकॉज मैंने चार्ट देखा नहीं है, बट सम एक्सपेंशन इज कमिंग, वैल्यूएशंस हैव cooled off little bit. But one more thing which we need to factor in these kind of businesses is something which happened in 2017-18, and we all get excited by capex aa raha hai, capex aa raha hai. We have to also see the supply of the capex. So what happened in 2017, there was an oversupply of MDF, so there was a reason why green panel went down from 70 rupee to 26 rupee. Action, green panel, century ply, सबका भर भर के कैपेक्स आ गया, एंड देयर वाज अ ओवर सप्लाई एंड देयर वाज अ मार्जिन कट. So again we need to see, because the whole MDF and all of this is very popular. I think we need to again see how much of capex is coming from the industry side, combine all of that data, and then take a call, if there is a genuine growth based capex which will just cover up the expected growth, or there will be oversupply, all of that. प्राइस मैंने देखा नहीं है तो मैं ज्यादा कुछ बोल नहीं पाऊंगा चार्ट्स का.
मैंने इस कंपनी का इसलिए नाम दिया कि क्योंकि आपने स्टार्टिंग में ना जितने पैरामीटर्स बताए थे, जैसे आपने कहा था उसकी होल्डिंग्स को भी देखना चाहिए, तो होल्डिंग के पॉइंट ऑफ व्यू से भी इसमें एफआईज ने और डीआईज ने कंटिन्यूस होल्डिंग बढ़ाई है. और मायरे एसेट मैनेजमेंट ने लास्ट ईयर मई जून में इसमें एट ए टाइम शायद 5 या 6% का स्टेक लिया था, और उसके बाद से वो कंटिन्यूस उसमें अपने स्टेक को थोड़ा थोड़ा करके बढ़ा रहे हैं. पब्लिक की होल्डिंग कम, चूंकि आपने जो पॉइंट्स दिए थे वो सब इसमें कवर हो रहे थे, इसलिए हमने सोचा कि शायद ये एक एग्जाम्पल बन सकता है क्या हमारे जो ऑडियंस है उनको देखने के लिए कि इस प्रकार की जब चीजें एक साथ कई स्टॉक में मिलती हो तो मैं उनको मतलब हम लोग आइडेंटिफाई कर सकते हैं फॉर इन्वेस्टमेंट पॉइंट ऑफ व्यू से, क्योंकि इसमें एक्यूमुलेशन एफआई और डीआई का बढ़ा है और पब्लिक का रिड्यूस हुआ है. जैसा आपने बताया कैपेक्स की बात भी यहाँ लास्ट ईयर हुई थी, अभी वो आ पाया कि नहीं आ पाया ये भी नहीं क्लियर हो पाया है, बट सेल में थोड़ी बहुत इनकी इंक्रीज हुई है, प्रॉफिट मार्जिन भी इम्प्रूव हो रहा है। तो जिस प्रकार से आपने जो पॉइंट्स बताया था मैं उन पॉइंट पर, और कंसल्टेशन भी 1 साल से चल रहा, मतलब इतनी ज्यादा गिरावट भी हुई, बाउंड वीक का लो भी बना, फिर भी इसने अपने पिछले साल के लो को नहीं ब्रेक किया, 160 के लो को नहीं ब्रेक किया। इस पर्पज से मैंने कहा था, खैर आपके उस पर नहीं है तो कोई बात नहीं। थैंक यू।
थैंक यू। और एक क्वेश्चन इज लाइक इंस्टीट्यूशनल एक्यूमुलेशन में स्टेज 1 को हाउ वन शुड लुक अबाउट इट, ये दिस क्वेश्चन इज फ्रॉम डेफ फ्रॉग्स।
Yeah, Prince, can you elaborate?
Yeah, for institutional accumulation, stage 1, how one should look at it? I mean, how?
So see, when institutions buy, usually, you will see on your volume candles, and your typical, stage one is, when the price moves up. And again, if you read any technical analysis book, basically जो up move होता है वो अच्छे volumes पे आता है, और जब correction होता है, then you will see the corrections are with, lower volume. But that doesn't mean in every stock that this will happen. It also depends, which kind of institutional investor is there and all of that. Like if I remember Thyrocare, the kind of institutional investors who were there, who were accumulating Thyrocare between 450 to 550, they frustrated, investors big time. But typically, you will expect a good volume on certain days. Whenever institutional buy will happen, you have to look at the delivery volume. Many times you'll get in bulk deal data, even in Greenply, I think when that whole big move came, it was Plutus who was buying around 75, 85 rupees. And then every quarter you need to, keep tracking the data, who is buying, who is selling, and all of that. So when you combine the price volume data, you combine the delivery data, see the big volume days, what has happened, how was the delivery on big volume days. Then at the end of the quarter, you go back with the data pattern change, and you see, who has increased, who has reduced. This is how, you get your sense.
Right. So LNPR Capital, you can unmute and ask your question.
Thank you for taking my time. Suru bhai, what's your view on the auto index? Actually, auto index chart just broke out after 5 years, and I already see few people writing obituary. So I want to know your view on it.
यार मैं तो 6 महीने से व्यू दे रहा हूँ. I wrote first blog in January. I did a YouTube webinar in April, and then I did one more webinar a few months back. So my view is we should always start. मतलब again, being a funda investor, I like to accumulate when there is some bit of pessimism. And actually, I have spoken enough here. It's a 2-3 year cycle, and the cycle is different for two-wheeler than four-wheeler than CV. We cannot say all the three segments behave the same cycle, because the triggers of the cycles are different. CV, I think already we had a good cycle playing out. So 2 से 3 साल रहता है अलग अलग ये तीनों का, and that is the whole game. So it's a cyclic sector, and we have to enter and we have to exit. Two-wheeler, I think still, we have not even started, because still we were in degrowth phase. I think July, August is the indication that slowly we are coming. PV, CV, already the cycle reversed. CV, I think we have crossed the middle period, because when you look from 2006 to 2021 data, you have 2-3 good years, and then you have 1 or 2 bad years. That is how it has played. And I think because of COVID, this cycle which peaked in 2018, it got elongated by 2 more years. So usually 1 से 2 साल का cycle होता है, तो 4 साल का हो गया है. अब उसके कारण क्या हुआ है कि सारे numbers, at least in two-wheeler and PV, the numbers have gone 4 years, 5 years back. So still there's a distance to be covered, but I believe my sense is CV might peak out first, and two-wheeler might be late to peak out. But we have to take each of these, we have to consider each of them differently. Also, if you look at the penetration of two-wheeler versus PV, it's very, very different. So there is a reason why your two-wheeler companies get a OEM companies, why they get a PE of 12, 13, and why your four-wheeler companies get a higher PE, because don't go by the per capita penetration. I mean, एक घर में 5 आदमी है तो हर आदमी मोटरसाइकिल नहीं खरीदेगा. So you have to look at household wise, and if you look household wise, it's more of a replacement demand, I feel. Else there is a household basis 70-80% penetration is there. But if you go for car, even household wise, the penetration is not more than 20%. So keeping cycle aside, the structural, all of these things needs to be taken into care, and then one needs to divide into CV differently, PV differently, two-wheeler differently, and then play it accordingly. But I believe we have crossed the mid path. एक साल 2 साल और let's see. I don't know. I mean, because we have gone 5 years back. So if India is to do well and अगर सब कुछ अच्छा रह रहा है तो लोग गाड़ी खरीदेंगे ही. टू व्हीलर फिर भी रिप्लेसमेंट डिमांड है, पीवी तो होगा ही होगा. So let's see how does this go. I think we are somewhere in the middle. We have crossed the middle in commercial. Two wheeler, I think we are starting, and PV we might be close to middle. That is how I would say.
Okay, thank you very much for your views.
Saurabh, uh, one more additional question on this two-wheeler side. Say if we stack three players, Bajaj, Hero, and Eicher. Hero is entry level, Bajaj would be at mid level, Eicher would be at the top level. Uh, Taking from the comment you made, should we expect that the penetration, at least for the entry level bike, is very much saturated in India? So if Hero needs to scale up, they need to scale up in a higher segment. What Bajaj did, Bajaj left the entry segment bike somewhere, they vacated this year, I guess. So Hero also might need to do something because they're right now their maximum of the sale is that 125cc and less. So, any view on that side? Since if we are stacking,
So my view is there are 3 4 ways we have to dissect this data. Every company. First, their product portfolio in terms of the price band, who is playing where, entry, mid, premium. Second, in terms of domestic versus export. So these are ways we have to dissect. And third, who is prepared in terms of the disruption of EV versus non-EV. And fourth is who is having a motorcycle portfolio versus a scooter portfolio. And then you need to, there are a lot of things which are happening. So when you look at EV, you will see that, basically your scooter segment is getting disrupted, and that the whole 60,000 to 1 lakh price band that is getting disrupted because of your FEMA 2 and all. That price band has become supportive for the EV scooter. It makes, from total cost of ownership, it makes sense. So there are companies, and then when any kind of these kind of issues, economic crisis issues happens, the bottom of the pyramid that gets hit first, and that is why your entry level people, they pricing band, they suffer first. So you have to think all these OEMs from these perspectives. So if you think from these perspective, Bajaj is first. It's basically now an export company. So the domestic market share they have kept on losing from last 30 years. Hero, they have not been able to scale up, as you said, in the premium segment, and entry segment is going to get disrupted by e-scooters, which is happening. Like, from 6 months back, 10, 15,000 scooter per month. Now we are selling 50, 60,000 scooter per month. So how well Hero is prepared or not, they are yet to launch. We have to see. So we have to see first who is least disrupted, whose most risks are getting triggered, whose least risks are getting triggered. So that way, if you see iShare already, they have gone through a down phase where their domestic numbers have come down from 8 lakhs to 6 lakh. But at least, they're not getting disrupted by the EV cycle. And in last 3 4 years, they have tried to build a strong international business, which they are trying to build. So it looks like that will be least impacted. The second is Bajaj, because Bajaj has very good share from export market. Now, if they lose market share, because TVS is gaining higher market share in export compared to Bajaj, so still Bajaj has to fight. But on a portfolio basis, from this whole EV disruption, they are also lesser disrupted, because bulk of their business is coming from export, and until less those countries start talking about EV, that portfolio looks relatively safe. TVS is there everywhere. So TVS, what they have done in last 5 10 years, they have built portfolios in every segment, right from your moped to the sports bike, to now they have come with iQube and all. So in terms of profitability, TVS ka jo pool hai, little bit of maybe 10 15% of the portfolio will get impacted. And Hero being an entry segment, it is worst impacted. So that is how we have to see these four companies, and then see how they are doing in terms of who is winning. So like if you see the numbers which are coming for Bajaj Chetak, so far in the the existing OEMs, Bajaj has launched and TVS has launched. So far TVS numbers looks better than Chetak, but let's see. And Hero is yet to take it bike to the market, and that is what is getting reflected in the price also. If you see, that is why your TVS and iShare has done well, whereas Bajaj and Hero has not done that much well.
Right, Kumar. So one question is on US market. So one person, Dins Patel, is asking, please put some light on investment in US market currently to diversify the one's portfolio. So what's your views on that? And we are like
So
when we see our market is resilient, we often say that our market is decoupled from US or other global markets. So what's your view on that also?
my view is nobody knows, yeah. People say, and when it happens, it happens. I mean, I heard the same thing in 2008, and then we all know what happened. See, the thing is, in long run, I believe we will always do good. But short run, mein kya hota hai, nobody knows. Even if you see COVID, all that happened in 1 month, and same price super chala gaya, and that happened because everybody was so panicked that if you look at money flow data, like what is the total, if I say for all the 500 companies in Nifty 500, what is the total rupees crore of value traded today? If nobody is buying, if some people are selling, still you will get a down, lower circuit. So it depends a lot on sentiment in short term. So long run सब ठीक रहेगा, but in short run, if US में, Europe में हर जगह problem आ रहा है, and even in India people get panicked, and if nobody buys, you will again get lower circuit. So where prices will go, that is one thing, but I believe from long term we are good. But we need to see company by company, we need to see export portfolios. But it doesn't mean that prices may not fall. Prices can fall 20% if there is some kind of global impact and the sentiment goes negative, because sentiment drives the money flow. And when the big guys, they feel okay, it is attractive, they come back to buy. Even on few lakh rupee of trade, you will see upper circuit being made. Now coming to US market, so मेरे को US market का बहुत ज्यादा idea नहीं है, and I myself beyond index investing, I have not gone further. And on 25th, I shared one tweet that it is at a very decisive level, and why I did that. So when you take monthly charts, if you take 50 years of Nasdaq chart, and I have spoken about a level called RSI 50 level. Again, there was a tweet that this RSI 50 level is very important. What I have seen, and you can go and you can see, even this is there for Nasdaq chart. No bull market, no momentum investing happens at a monthly RSI below 50. If the momentum investing, if the big run up momentum has to come, it always comes at this monthly RSI above 50. And many times when it goes below 50 and then prices try to go up, the same 50 level acts as a resistance. And what I noticed on 25th, the same 50 level, Nasdaq got a resistance and then it fell, which means it is not able to cross 50. So ये जो move आया था ना 18 whatever 15% gain, that move got challenged at that 50 level, and even the price, you will see certain moving averages that is happening. So still I don't see that US market, I mean, to make any kind of aggressive bet in US market, I would like to see that level go above 50. Because fundamentally, I don't think I have enough idea. So I'll better go with my system, which is telling that be cautious in that market until as fundamentals become so attractive that you are getting all the Nasdaq at a maybe at a valuation of 16 17x. Then that's a different call. Then you don't know what will happen, but you feel there is enough margin of safety and you keep buying. So right now I don't see the technicals also in favor, and I don't have that much of visibility on fundamentals to say it is super attractive. So I'm not doing anything. I have a 2-3% kind of position in the index fund, which I continue to hold. That's it.
All right, Saurabh. So Anirudh, you can unmute and ask your question, please.
Good evening, sir, and thank you for allowing me to have say my question. So my question is, how do you pyramid a position or exit a position, citing whatever principles you follow, either funda or technical? So I do want a guidance on how to pyramid. Suppose you said initially.
I already replied that. So there are two ways I do it. I took an example of stage 1 and stage 2 if I am doing a fundamental investing. So maybe if you see the recording, you'll find the answer.
Okay, sir. Okay, thank you, sir.
Thank you, Anirudh. So one more question is, yeah. So yeah, the question is from Anant. He is asking, does Suru ignore stock price falling below crucial moving averages when the whole market is crashing, or if a stock has good fundamentals but is falling due to temporary issues? So will he buy in such situations?
So see, one thing is whether the index is falling below moving average, and the other thing is where a particular stock is falling below moving average. So is the call on index broader market, or second is the call on the stock? And the third is, when it is falling, is it falling after a big move? Like, let's say if we have a stock like your IAX and all, typically, which was in a very good momentum, and then it is falling. So many times you don't need to wait for that moving averages to be broken, because moving average is a lagging indicator. And the longer the moving average you take, the more will be the lag, and the late will be your decisions. And many times, that is not the only way you take a call on exit. Specifically when it comes to stock level exits, if you are getting a high volume sell off, or if you are getting a lot of weakness, which I spoke about in charts like IRCTC, which are exhaustion move, so you don't need to wait for moving average. But let us say, we are talking about the index or the market, then of course moving averages and all, they are important. And at least even from a long term investing perspective, the 200-day moving average, that's a sacrosanct number. But moving average is not the only thing I take. Again, I have a system. There are a few more indicators. I have a system built around price, volume, moving average, RSI, a lot of these things. But there are certain quants things also, like I shared with you, percentage of companies which are above 200-day moving average, percentage of companies which are above or below 50-day moving average. So everybody tries to simplify, but my analysis says it's not that 100% simple that you can just take one metric. But still, those metrics save you from catastrophic events. So that way, yes. But it's not like I will take a position back when the stocks will go above that moving average. That is where I will disagree, because I have a value investing mindset also, which says कि जो चीज जितना नीचे, अगर मार्केट इतना नीचे जा रहा है तो अट्रैक्टिव हो रहा है. It's just that you have to avoid that panic situation where any fall can happen. But again, if you look at the bottoming out is a different phenomenon. In bottoming out, you don't moving averages for momentum. So I am not waiting for momentum. Let's say when the crash happens or a stock falls, like let's say if I can talk of a company like NCL Industries, which I spoke in one of the top 5 small cap ideas I'm exploring. I'm not waiting for momentum to come there, because I feel there is a value, and I can see there is this is my belief that the chart is accumulating. And again, whatever we are speaking, nothing is a recommendation. But I can, if I find value and if I can find accumulation happening, I'm willing to wait for 2 years, and I'm willing to buy in parts, and I will let the momentum come whenever it comes. So moving averages and all, it is good for somebody who wants to play only when there is momentum in the market. But if somebody who wants to buy value, need not to be, the index need not to be above moving average, because then how will you do the value hunting? How will you buy the panic? So there are different ways. Even in technical, there are different ways of doing that, but that doesn't happen only from moving average. But yes, from the top, moving average getting broken, it is a warning sign at the index level. But for bottom fishing and for value investing, we should not think of moving average. We should have more more concrete conviction over the valuation, attractiveness, and all of that.
Right, Saurabh. So, Saurabh, two questions at one go. First of all, I would request, like, for a beginner or may a mid-level or purely who is into trading, so how they can benefit from your courses which you are offering at Scientific Investing. So, our audiences would love to know about that. And after that, few investable spaces apart from auto and banking, you have been vocal about from last 6-12 months. So any new investable spaces you find value emerging? So these are two questions. Yeah.
Sure. So first on the courses side, so it's a reflection of what I do and what I have learned. So if you see, the way I have structured it, first you have courses. So like a fundamental analysis course or a technical analysis course. Then comes the strategy, whether you want to go with a techno funda strategy, blending fundamental or technical, or you want to build your own algorithms. So that is what I call a learning track. So we have 3 learning tracks. FunTech, which is a techno funda. So it has 4 courses: fundamental, technical, techno funda, strategy, and there is a data analysis course. Or there is another track called QuantTech, which is if somebody wants to build algorithms, like I will discuss, one person has asked, can you help me to develop a screen for momentum using RSI? So how do we screen? How do we backtest? How do we try 550 different things? How do we know whether it has worked for last 20 years or not? What was the best year? What was the worst year? How can I convert some of my chart patterns into a mathematical algorithms? So we do that in QuantTech, which is for more kind of process driven non-discretionary kind of decision making, where we cover technical analysis, Python, some quants, algorithmic strategies, and all. So these are kind of learning tracks or courses we have, and then we have a practitioner membership where whatever we are studying, learning, course analysis, sector analysis, webinar, algorithms, technical analysis, we cover everything, which is the annual membership. So these are some of the offerings, and it is totally aligned with how I have been learning, all these different skill sets captured there. Now coming to what is attractive. So from a sector perspective, see, in March when the market, created all this correction, again I had shared a tweet and a 15-minute video. How do you find strength in the market? And there were three, four things which came. Unfortunately, banking didn't come there, and it was my conviction that I stuck to banking. And simple reason it didn't come because FIIs were selling. Last 1 year till June, July, whatever FII selling has happened, 50% of the FII, which is the worst selling in last 2 decades, has happened in banks. And for them, it's okay because FIIs were the first one to realize the potential of banks in India, and they have they have gone through a 25-year ride. So if you are if they are offloading 20% of that, it doesn't matter anything. But then it creates a pricing pressure, and that might be one reason why banks didn't do well. And once the FII selling stopped, then you see the whole bank nifty has gone from 330 to 400. So it was more my fundamental conviction that though banks didn't come in my a scanner which finds the strength in the market, I still stuck to banks. I think CUB was the only stock which came, and I had studied still. But autos were there, and auto fit in my fundamental also. Capital goods was there, but I didn't do any work, any funda study in capital goods. So I take capital goods more as a trade because I don't know when it will top out. Defense was another sector which came there, but again, I took whatever small positions I built, I took it as a trade. So I am heavily invested only in auto and in banks. Capital goods, defense, I am playing more as a trade because I have not done a lot of fundamental study. But there are certain bottom up approaches where I am finding certain stocks which are heavily beaten down. They may not do well immediately, but I'm least bothered. So I'm not building a 5-6% position. I'm building like a 1% position. And the idea is whenever you get a 3-4% kind of fall, you keep accumulating certain companies. Again, those 5 companies which I showed in that video, which covered Ultramarine was there. I think one of the mutual funds was there. One of the FMCG companies were there. So these are the companies I look for, and I am trying to build positions slowly. So yeah, apart from this, I don't find lot of value right now in any sector. There could be value which I am not able to evaluate, or there is a momentum which I will refrain to calling from value because I don't know how to find value in that. Banks, I think still we have a good 2-3 years runway. I think we are just starting in banks. Auto, I think we are, we had that initial phase. We might be somewhere in the middle. So these are the sectors. But right now, these are the sectors. I don't find a lot of value anywhere apart from bottom up opportunities.
Right, Saurabh. So, accidental engineer, you can unmute and ask your question.
Yeah. Hello, Prince. Hi, Saurabh. Am I audible?
Yeah.
मेरा क्वेश्चन ये बारे में, सपोज XYZ कंपनी है और उसमें अच्छा सा कैपेक्स अनाउंस हुआ था, देन कैपेक्स इम्प्लीमेंट भी हुआ अच्छे से, एंड दैट बट मैनेजमेंट अग्रेसिवली अनाउंस करते गया है कि आवर रेवेन्यूज विल ग्रो, एंड वो मार्केट में फैक्टर भी हो गया है. तो ये कंडीशन में अगर फंडामेंटल अगर हमें दिख रहा है कि ये रेवेन्यू तो बढ़ने वाला है, तो मतलब कैसे सोचना चाहिए ये सिनारियो में? अगर कोई बेसिक इन्वेस्टर है, अगर फंडामेंटल देख के सोच रहा है रेवेन्यू भी बढ़ने वाला है, कैपेक्स भी हुआ है, बट मार्केट ने फैक्टर भी कर लिया है, आई गेस, तो ये हाउ टू रिएक्ट इन सच सिचुएशन? कैन यू प्लीज guide little bit on this?
So my view is, see, it will depend business to business, and usually in bull market these things become very talked about, capex and all. Because in bull market, even on Q1 and Q3 results, companies go up because nobody bothers about balance sheet. But again, it comes to what is your investment psyche. Are you looking for good companies? Are you looking for quality companies? Are you looking for small cap investing? Or are you looking to leverage that capex announcement as a sentiment indicator in a raging bull market, where on these kind of news things will go up. It's very difficult to say कि क्या factor हो गया है क्या factor नहीं हुआ है, वो सब hindsight में ही पता चलता है. What I do is see, if your view is very short term, then of course you don't even look at much of fundamental. You look at the price and the chart and the screen. But given you are asking more from a fundamental perspective, my answer would be even before capex, look at the balance sheet and the cash flow. Is this company which just want to grow out of capex, or are they respecting the return ratios and all? Whether if it has been factored, I think all of that will depend lot of things here. Many times capex comes and still prices don't move because there is a oversupply. Like I spoke about what happened to plywood industry in 2017, or in the tire industry, lot of supply came. Or it could differ by businesses. There could be businesses where the impact of capex plays in a very different time frame cycle. Like if I can take example of Apollo Hospital. In a hospital business, first it takes 2-3 years for that capex to deploy, and then when the hospitals reach around 65% kind of capacity utilization, then they do a break even, and then you will see from a loss to a very good profit. So if you go and if you read Apollo Hospital con calls, when a big 3000 crore capex was happening in 2018-19, everybody was frustrated. So today is a market when on capex news, at least not today, but maybe 1 year back, on capex news, companies go up. But then there was a market in 2018 when on capex news, all the analysts were frustrated. Why? Because company took a debt for that capex, and that debt had a big interest rate. It had a big depreciation. So your P&L is looking very bad, and your revenue contribution is not coming. And then you need to run the hospital for 2-3 years to reach the 65% utilization. And then of course you need to analyze if in that city everybody was coming with a big capex or not. So you need to identify all these factors and then take a call कि ये capex पहले अच्छा capex है या खराब capex है, and then you decide कि उस capex के basis पे investing का क्या करना है.
Anubhav, you can go next, unmute and ask a question.
Good evening, sir. Sir, I remember you gave an interview to Vivek Bajaj, sir. Sir, over there you mentioned that you had some problems or challenges you faced regarding asset allocation. So, I think in 2020 you gave the interview. In last 2 years, have you overcome those challenges, and if so, how have you been able to do so? Thank you.
Yeah, actually, I replied. I think, when I was discussing a lot of things, indirectly I covered, and that is what I said. I had my own challenges. So if I take in terms of companies like CCL Product or Ambika Cotton, or let's say a Tata Elxsi, it's not like I missed in identifying good companies, but it was more like I took positions in a market when, the whole small cap and mid cap index didn't do well. But I just took big positions and I held. And when the prices don't move for 2-3 years and you are in 20% kind of negative, you start getting frustrated, and bigger the position, bigger the frustration. So that is where I said now I have changed my approach a lot. There's a lot of technical analysis which helps in all these position building. Now I try to make a view if the stock will do good for 2 years or not. If it will not do good, whether I want to buy it or not. If I buy it, I have my expectation set that okay, I am not looking for any return on this percentage of portfolio for next 2 years. But then how should I add? So now I don't go and buy all the 5% in one go, even if I know fundamentally it is very, very attractive. Problem क्या होता है कि when 2 years the stock doesn't perform and you see other stocks moving, then you feel why you are an idiot, why you are not buying that. So it's a genuine thing. So that is why I appreciate value also, I appreciate momentum also, but it has to be played differently. So now I try to balance out. I mean, I don't buy in one go. I try to identify the stock is in stage 1, stage 2, how long it is, how long the pain is, how the broader market is. पहले मैं broader market देखता ही नहीं था. I am just a small and mid cap investor. I'll invest. But if you see 2018-19, the money flow was not there in small cap and mid cap stocks. You can see. So when the big money is not flowing, the stocks will not move. So now there are many things, and that is what I have tried to build. That is what, when I quit job, I wanted to build a lot of these things. I was not getting time. So with ample time, I'm able to build a lot of these systems. I'm having much better clarity, and all of those things are playing a role. Like if you see in the October till October to here, unlike 2018, I reduced my exposure to small cap index. Even when I was buying more of large cap index or small cap stocks where I'm very sure, and there also I'm buying small positions, because still if you look at even last week chart, I don't know how many of you track, if you look at the weekly candle of Nifty, the closing price of the weekly candle of Nifty is still just at the same level of closing price of previous week. It has not gone above. And when you look at all the highs which we have seen since October, still we are creating a lower high. We have not made a higher high. And if you look at small cap index, and again, if you look at the 40-week moving average last 3 weeks, same high is creating resistance. And still, Nifty has recovered much better than small cap. So now I take broader market, money flow, how to accumulate a lot of these things, which has helped me, because now, it has helped me to manage my volatility, manage my drawdowns, and I don't get frustrated that easily. So yeah, there has been a lot of improvement, and always there is a scope of improvement. So that is where it is. So because of all these factors, it has improved.
Right, sir. So, Saurabh, one person has asked your views on FMCG sector.
सो यार सिंपल व्यू ये है कि अगर बड़ा पैसा बनाना है तो 40-50 पी का स्टॉक खरीद कर नहीं बनता. तो मेरे लिए तो सबसे पहले यार वहां पे आउट हो जाता है कि मतलब व्हेन आई हैव थिंग्स व्हिच आर मोर अट्रैक्टिव व्हिच कैन डू मोमेंटम. I know in last 3 months it has been one of the best performer, but still I don't see how a sector can get such a momentum from here. I mean, it'll get then your 50p, 40p stocks will become 70, 80p stocks. So frankly, I don't track much beyond bottom up approaches. So as I said, MRS Vector was one company which I tracked. DFM fortunately didn't lose money and it has done well. But at a sector level, मतलब ठीक है, कंपाउंडर सेक्टर है, लॉन्ग टर्म गुड अपॉर्चुनिटी, बट 10% growth companies at 40-50 PE, somehow I could never understand, and I could never feel that I can make big money. So, I have never, I mean, I always got something better. Even in 2000, yeah, when I entered, when I felt that, this could help to survive in the market. So if you go through 2020 April, my friend Vivek Mashrani and we did a webinar together. And then again, the same strength analysis I did in this March, similar kind of analysis I did then. And maybe because, defensive companies go up, and also pharma and FMCG I purchased there. So, I mean, I'm not very bullish or bearish. I think, yeah, it's in a zone where it is not coming even my momentum screen. So, as I said, most of my ideas come from, these kind of systems. It's not something which I see strong in the momentum screen. It's not where I see fundamentally value. So, not much view, but yeah, few bottom up approaches, few opportunities. Dairy could be another sector where I see you know it went through a lot of correction because of raw material prices. So one company I have a small position, Dodla Dairy, I've accumulated recently around 510, 520, again more of a techno funda. KRBL was another company, but now I think again these are little dubious names. It has come out of system, but the typical big companies I am not invested, and I mean I don't have any big view.
Right, sir. So, guys, any names taken during the conversation are no reco in any forms. These are purely for educational purposes. These examples are cited so as to explain the concept better. So, sort of any limitations you see for multidisciplinary investing and trading?
Yeah, I will tell you. There are 2, 3 challenges and big challenges. One is when you try to learn too many things, many times you get confused. What are you doing? Whether you are doing this or you are doing that, and how do you allocate your time? And how do you divide? That becomes a big challenge. Second, it's like you are trying to do too many connect. You are trying to get into too many zones, and the initial 1, 2 year period will be little frustrating because you will not see the connection. It takes some amount of time when you start connecting the dots. So no, that is the pain period. That is second. The third is when you try to learn many things. किताब पे कोई पढ़ाई नहीं होती, सारा पढ़ाई पैसे लगा के होती है. So you have to allocate, and when you try to learn many things, there will be a lot of failures. So I call it my experimentation or R&D cost. So we have to ensure that when we are trying to do things or learn things where we are not comfortable, of course we will discard it. We are not comfortable, but Like I did a intraday trading, or I did a 2 day kind of trading to realize this is not my cup of tea and this doesn't make me happy. But to do that, to realize that, you need to do that. So there'll be a cost attached to it, because theory pe kuch nahi hota. So we have to ensure that we don't make big mistakes, or whether we are a diversified investor or concentrated investor. To realize who you are, you have to do that, and sometimes the cost, the cost could be higher. So we have to ensure that we don't pay a very big price, that we go 3-4 years behind. So these are 3-4 things we need to keep in mind, when we are trying to do all of this. And fourth, it takes time, because somehow, for me it was relatively easier. I will tell you one reason: because of my professional career, where somehow I was able to look things more from a data perspective and able to do, and I never looked technical analysis as chart. I look technical analysis only as a some of the mathematical numbers and calculations and all, so I could connect better. So from what background we are coming, all of that is important, and it's not necessary to learn a lot of things. If somebody is very good at one single style and he's happy with it, it's working, it's fine. So we need to assess our own situation, our own life, our own journey, our own aspirations, what makes us happy, and are we happy with our current style or not, and then we should try to get into it, whether we want to get into it or not. But what I will tell is, many of us, we want to just mimic some big investor. That will never happen. If you are not everybody cannot be Mark Minervini, because if you are not getting a happiness in in momentum investing, or 10 to 3 kind of trade, you'll not become that. So find what is making you happy. Is reading lot of annual reports making you happy, or sitting 10 to 3 in front of system is making you happy, or is writing an algorithm which is working and you are doing your job and your system is making money, that does that make you happy? So you have to find your happiness in the market, and there are 20 different ways. So until unless you don't try, you will not know. And many times what happened, because we have been fed only one style of investing, we feel that is the only way of making money. And I also suffered from the same problem, unless I met different people with different styles and I realized the world is very big. So you have to take care and factor all of this into account and then take your call.
All right, Saurabh. So, guys, I have pinned two tweets in which you can access the free. So, a lot of free and very informative videos in which Kumar Saurabh has shared the fundamental and technical side and how to go about evaluating a company, and various case studies he has discussed over his YouTube channel. And again, in case you want to have a look at his courses, that link is also available. So if you find value, obviously you can resort to that. So Gaurav, another question is like, what I mean, what we say. So there are many audiences which have just started their journey. So what would be your sensible advice to them, how they should go about it, and what is the reasonable expectation they should have from the market?
So 2-3 things. First thing, don't make big mistakes, because big mistake will make you fearful of re-entering the market. Make small mistakes. So that is the first thing I would suggest. Second, start slowly with equities. So maybe still be, even when, so I started in 2 innings. My first inning was 2007, and because of various reasons I stayed away for 4 or 5 years. So when I started second inning, I didn't start with 100% equities. I started with mutual funds, and I gave time. And over a period of 1.5 year, when I got that comfort, I shifted 100%. So second is, whatever shift, make it, slowly over a period of time, as you get more evidences that you are doing the right thing. Third, when I said don't do big mistakes, which means, if you are doing a FNO without proper hedge management, it's a big mistake. So try various things, but limit your losses, maximum possible losses. Fourth is, try to read different kind of investing style. So many times, we just get driven by only one style of investing, maybe because this is what has been most popular. But many times you may not align with it. And what I see is, there are a lot of one line statements which are made, that this type of investing style is good, this is bad, only this making money, that doesn't make money, only trading doesn't make money, only investing makes money, only long term investing make money. It's the process, and one has to align with the process. So my suggestion would be, try to find the best books on each of the styles. Like, try to find the best book on long term investing, or try to find the best book on CanSlim, or try to find the best book on Technofunda, or on pure trading. Expose yourself, take first 2 3 years just as a learning ground without making big mistakes, and then you will find where you are good at, where your behavior is aligned, where your emotions are aligned, and where your academic and intellectual everything is aligned, and then try to go deep into one. So that is what I would suggest, these 3 4 things you should do.
Very rightly said, Kumar. And Kumar, we know market, you often talk about cyclicals and all, and market also have various kind of cycles. So also, would you like to touch upon that? That would be very helpful for our audiences.
Like exactly like what in terms of market cycle?
Yeah, because the as you often say, the entry exits are very important. So the broader market, how the economic cycle is doing, how the and the business cycle is doing. So there are various. You often tweet about it. So
So, I mean, if you see September, I mean, June to September, October was a time when, I was very cautious because of the froth in the valuation. And again, if you take the same, again, I have made lot of videos, again, go through the videos. So one is ultimately in the long term, your index has to give the same 14% return. So whenever the returns are, 25% or the returns are -5%, they will revert to mean. And the market cycle of price and the economic cycle, everything doesn't play in the same way. Sometimes it's lag, lead effect, all of that happens. So my suggestion would be, keep looking at broader market. Don't try to time the market a lot, because it's not like we can't time the market, but timing the market is not about being 100% or 0% invested. There are times when it is apparent that it is very attractive, when it look very difficult, and there are times when it look very when very very pessimistic, when the real opportunity is there. So again, look what kind of CAGR return you had at an index level in September. There was another data I shared. There was never a 24-month period when the small cap index didn't correct for more than 15%. And in 23rd month, this cycle we did the same. There was another data I shared on the Google trends of these kind of words like multi-baggers and all. So keep always a track on these kind of data points, which will help you to, avoid froth in the market, and which will help you to, get somewhere near. If we talk in terms of current market, I think the problem is we always try to think market in terms of extremes, but there are only 20 25%, 10 20% the times when the markets are in extreme in terms of high valuation or low valuation. 70 to 80% of the time market remains in that fair zone of plus minus 10%. I think we have come back into that fair zone. We came back, of course, for sure, in that March period. uh, we have gone little fast, we have gone above, but the max I would expect is maybe a 10% correction, until unless globally there is too much of bad news and there is a sentimental fall in market where the money flow stops and all the SIPs stop, and because some people are selling and nobody is buying, like happened in COVID. Those kind of things, I don't know if it will play out, but I think we are somewhere in the middle. We are nowhere in the extreme, anything from this is a highly overvalued market or this is highly undervalued market, a kind of plus minus 10% kind of thing.
all right. So, guys, I would strictly recommend you the YouTube channel. You will get many diverse videos, and the point of view and the hard work which has been put by Kumar Saurabh, you will really love and appreciate that. So, have a
And
look at it. Yeah.
yeah,
So,
and
Kumar
those reels
Saurabh,
will be
how
very
good we are
clickbait kind
doing?
of thing. Yeah, you'll the titles will be very clickbait, so don't get discouraged, because that is how YouTube works. If you don't make clickbait titles and screen, nobody comes to watch, but the inside content will be very, very different.
Yeah, guys, I have from last more than a year, I have been consistently watching his videos and gained a lot of information and good insights, and that are implementable as well. But if you think you will get some gold mine in the form of stock names, then that would be a wrong thing to look for. But yeah, if you want to know the essence and the hard work behind the videos, that would be really helpful for longer term in the investing arena. सो विद दिस आई वुड वंस अगेन से कि आपको एक बार जरूर देखना चाहिए, काफी इंटरेस्टिंग है, बिल्कुल अलग है. आपको यू विल गेट सो मच ऑफ स्टफ ऑन यूट्यूब, राइट? एंटायर डिफरेंट, हिज पर्सपेक्टिव्स आर इनक्रेडिबल. सो आई वुड सिंसियरली, मतलब आप लोग उसको एंजॉय करेंगे. So we have Saurabh, how good we are on time?
Actually, we need to close. There is a call I have to take at 8:45. Yeah.
Okay, okay. One last question from last speaker, and then we'll be wrapping it up. Vijay, you
Hello.
can ask.
Yeah. Thanks for your time. I had one query on averaging up. So in this particular example, it's about Mastech. I was in 100% profit, and then I went ahead and added more, and now I'm in loss. So what's the theory to be followed when you are averaging up? Thank you.
So, I mean, no particular views on stock, but I think I was one of the people who called that Mastech top. So I'll tell more from that angle. So see, first we look at Mastech history of last 20, 25 years and what has happened in IT sector. And this was the company which came with, Infosys and TCS, and see where they went and where Mastech went and why it happened, why it didn't perform. And then there was a period of 3, 4 years where Mastech has really done well. So there was a actual story of a person who came, and I don't know if you are aware of Majesco and the Mastech Majesco story and all of that. And then that person had gone, and then Mastech also in the IT wave, it did well and it topped. See, one thing, when the sector doesn't do well, it's very difficult for the stocks to do well. And sectors peak when everything is there in the euphoria. But if you look at IT valuations, we never had those kind of IT valuations in last 8, 10 years. And if you look at my tweets, the day it started with people will come back to office. See why IT worked. There was a big digital push. It's a great sector. But the third big reason was the margins. No, everybody was working from home. Nobody was traveling. So a lot of margins in the IT sector got saved, and you got that margin lift. And once the economy opens, once people come back to office, the sales team is traveling, those margins, that will, going to hamper. So it was more of a sector call that, okay, this sector is going to top out. And then you look for the stock's weakness. And when you would have seen Mastech stock, of course, there is a weakness. I think I highlighted multiple times. If I am not wrong, it has done three top and then it fell. And then there was a heavy volume sell off and all of that happened. And now slowly you are getting into a zone where, the Europe and, the countries, they're having their own issue. And still, I believe Mastech gets lost. I have not yet tracked this business in detail. So I am telling from a very limited information. I believe Mastech does a lot of business for the UK government and all. And again, I have said that be cautious of the companies which are having high exposure to export. You need to, take care of how sustainable those numbers are, how sustainable the growth numbers are baked into valuation. So I have been bearish on IT sector itself. I am not yet bullish on IT, but I am not yet bearish on IT. So many times, as I said, 60, 70% of the sectors, they will be in no man's land. So there is no view. I think a lot of froth has gone in out of IT, but I don't see that big money getting interested in IT, and hence I am not interested. And relatively, I find sectors better. So I believe the same will happen to Mastech. So it might get bottomed out. I believe the froth is getting out, but sometimes one sector gets out of favor, it takes 2, 3 years, or the next big news or next growth driver sometimes, to drive the big money. And if there is high growth in some other sector, the big money will chase those sectors, which right now is happening in capital goods, auto. They might become overvalued and they might stay overvalued, like IT was there some time back, and again they will fall 30, 40%. So you have to be very sure of your thesis, your horizon, your time view. Are you there for 10 years? Are you there for 2 years? How do you see the ex-CEO, going out? How are you convinced about the new person? How are you convinced about, how they will come up with the things which are going in the Europe and UK economy, and then you need to take a call.
Right. So, Kumar. So, Ankit, you need to be very quick. Saurabh has another 4 minutes with us. Otherwise, we will ask him for closing remarks for the day.
Yeah, thanks, Prince. I was there just as a listener. Thanks for giving me the opportunity to speak. I'm a huge fan of Saurabh Bhai and got a chance to meet him recently. I have no questions right now. I just joined, and I hope he continues doing his wonderful, awesome work. And I would also subscribe to the same thought. Please subscribe to his YouTube channel because I know how much of hard work he put in for each and every video. That's it, Prince Bhai. And all the best, Saurabh Bhai.
थैंक यू अंकित। एंड गाइस सच में बता रहा हूँ, क्लिक बेट भी हम लोगों के कहने से कुमार सौरभ भाई ने ऐड करने शुरू करे। ही इज सो मच पैशनेट अबाउट हिज वर्क, ही नेवर कॉम्प्रोमाइजेज ऑन द क्वालिटी ऑफ वर्क। और बेसिकली जो ही इज फ्रॉम एनालिटिक्स एंड डेटा साइंस बैकग्राउंड, तो दैट डेटा एनालिसिस और डेटा माइनिंग इज हाई क्लास, सो यू विल really love and appreciate the hard work Kumar Saurabh has been putting in. So, bhai Kumar, any closing remarks for the day? Any last advice for our audiences?
No, I think let's keep meeting. Let's keep. My view is let's keep take every skill from very open heart. यार, never have this bias कि ये काम करता है, ये नहीं करता है, ये technical काम करता है. Be very open. If you look at the history, the biggest people who have made 50, 60 people who have made money for decades, never ever they followed same style. There were people who had 100 stock in portfolio and they have also made money with 10 stock also. A techno fund also. So be very open and then see where you are fitting in rather than sticking to one particular kind of style. And there was one question which we got on Twitter and we left, so I'll just finish this question. What is the one technical analysis tool or indicator or chart pattern that is must use for fundamental investors? My answer, if life would have been so easy with one indicator, everybody would have followed. But I would suggest that not an indicator, but if you're somebody who doesn't have a 5 year 10 year kind of view, if you are getting frustrated with 1 year 2 year, if it doesn't make money, try to be in the stocks which are in uptrend, or try to be in the market which is in uptrend. Because we all like, and मैंने ये सब किया है यार, वो डाउन ट्रेंड मार्केट में ना पैसे लगाते गए और पता नहीं चलता था 2018-19 में कितना गिरा जा रहा है स्मॉल कैप. So try to understand at least the trend, forget about chart patterns or indicators. Try to get the trend of the market and stock. Like I told, abhi bhi ye jo nifty bhaga hai, if you see, still it's a lower high. The last 4 rise which has happened since October, everything is a lower high. So be aware of this, and how do you balance it out of portfolio, whether how much you go in cash or how much you divide into large cap, small cap, that all depends on your style. So but trend is something which, irrespective of knowing technical, not knowing technical, try to follow it. It will help, and it'll help you to manage your own levels of frustrations when things don't go in your way. At least you will know why it is not going your way, and those things. Okay, so we'll close with that. And thanks for all the
Thank
questions.
you, Saurabh.
It's great to see all of you coming on a weekend, so my pleasure. And we'll keep in touch.
Yeah, sure. We will invite you for some more sessions in time to come. And guys, one last thing before I close, you will see, like when the market was about to peak in October last year, he has cautioned it several times. So if you see his old tweets, so you will get a touch like where Froth was there. So he has cautioned the retail investor time and again. So my advice would be surely check his handle, and surely you will at least, देखो हमको दोनों views लेके चलने चाहिए. We should not be like कि हाँ भाई जो tips दे रहा है या stock names दे रहा है, those are good handles. There are so many hidden gems like कुमार सौरभ भाई. तो आप लोग appreciate करिए उनके hard work को और get in touch. It was really nice to have you today, Saurabh. So thank you so much.
Thanks, Prince. Thank you,
Thanks, brother.
everyone.
And so before we close, I have a small announcement to make. So tomorrow we will be hosting Anish Munka around same time, 7 p.m. tomorrow evening. So our audiences can join again tomorrow. And it was really nice to have such a lovely audience which keep with us for almost 2 hours and patiently listen and ask quality questions from the speakers. So thank you again. Over for today. Good night.